Palantir's earnings report is set to be released on February 3rd, and it's one of the most anticipated reports of the year. You might be wondering whether now is the right time to invest or if it's better to wait until after the numbers are out. Let's break it down. First, let's recap Palantir's incredible journey in 2024. This stock wasn't just running, it was outperforming giants like Nvidia, posting an astronomical 341% gain. What also caught everyone's attention wasn't just the price movement. Palantir achieved something pretty remarkable, its addition to the major indices. We're talking about the S&P 500 in September, then the NASDAQ Global Select Market in November, and to cap it all off, the NASDAQ 100 Tech Index in December. A proper tech giant power move. So what drove this incredible performance? First off, Palantir has been knocking it out of the park with their revenue growth. We're looking at 4 straight quarters of accelerated growth, with Q3 2024 hitting a whopping 30% year-over-year increase to $726 million. Their US commercial revenue jumped 54%, while government revenue rose 40%. That's the kind of diversified growth that makes investors sit up and take notice. But it's not just about the numbers. Palantir has positioned itself right at the heart of the AI revolution with their AI platform. They've been making all the right moves, signing major contracts like the $619 million deal with the US Army. In terms of profitability, they reported $180 million in adjusted free cash flow in Q3 2024. Solid, sustainable growth. Now, in terms of stock structure, what makes it interesting for us as investors is that the stock has pulled back about 17% since the start of 2025. And there are 2 key reasons for this. First, it's pretty normal to see a pullback or maybe profit taking at the start of a new year. Second, and this is crucial for our discussion today, stocks often experience selling pressure as we approach earnings announcements. Investors get nervous, they dump shares, and this creates the pre-earnings dip we're seeing right now. This brings us to the million-dollar question. Should you buy before or after earnings? Let me share my approach. When it comes to earnings, we typically see 3 scenarios play out. The stock might open flat, essentially shrugging off the news. It could gap up. That's what we're all hoping for, and ideally, that gap up creates momentum for the trend to continue, or it could gap down, which is where having solid risk and exit management becomes crucial. Let's look at a recent example. Palantir last reported earnings on November 4th. Before its earnings release, the stock dropped around 9%. It then gapped up 15% on earnings and then rallied by 104% to the current all-time high of December before this recent correction in anticipation of the upcoming earnings. Looking at Palantir's earnings history in 2024, we've seen both gaps up and gaps down, but the overall trend has been strongly upward. While past performance doesn't guarantee future results, it is an excellent guide, and Palantir clearly showed resilience around earnings announcements last year. For Q4 2024, Palantir's management is expecting revenue between $767 million and $771 million, beating analyst estimates of $741.4 million. Analysts are looking for earnings of 11 cents per share, which would be a 37.5% increase from the previous year. These are strong numbers. My personal strategy, though, is to wait until after earnings on February 4th to make any decisions. I want to see Palantir recover from this correction and set new record highs. Could this happen during earnings? Absolutely. With the broader market showing strength, we could see Palantir gap up and then push towards $100 per share and beyond. Palantir's commercial sector expansion has been remarkable, especially that 54% growth in US commercial revenue. They're diversifying into healthcare, energy, and manufacturing, reducing their reliance on government contracts. Their AI platform is attracting Fortune 500 clients and their international expansion is opening up new markets in Europe, Asia, and the Middle East. Global and geopolitical trends are playing a significant role in Palantir's growth. Rising tensions and increased defense spending have boosted demand for advanced analytics and AI-driven solutions. Palantir's platforms like Gotham provide governments with critical intelligence, making its software essential in modern defense strategies. However, reliance on government contracts is a double-edged sword, offering stability but exposing the company to risks from shifting budgets or political changes. Valuation is also a concern, with some analysts questioning whether the current enterprise value relative to revenue is sustainable. We've seen insider selling, including from CEO Alex Karp, which has raised some eyebrows, but could be nothing more than some profit-taking from the CEO, and really, why not? And in the rapidly evolving AI landscape, competition is fierce, especially from tech giants like Microsoft, Amazon, and Google. While I'm bullish on Palantir's long-term potential, I'm staying patient right now. I want to see how these earnings play out and how the market reacts before making any moves. As the saying goes, standing aside is also a position, especially when we're this close to a major catalyst like earnings. The key is always to be prepared to react when the market shows its cards, either to the upside or the downside. So what do you think about Palantir's prospects? Are you buying before earnings, waiting until after, or staying on the sidelines? Let me know in the comments below. So, what are the key factors that could make or break Palantir's momentum in 2025? First, their AI platform, or AIP, isn't just another product. It's becoming the backbone of their growth strategy. What sets it apart is how it integrates into AI real-world workflows. We're not talking about theoretical applications here. We're seeing actual Fortune 500 companies implementing these solutions and getting measurable results. Worth mentioning again, in terms of the geopolitical landscape, with global tensions as they are, governments worldwide are increasing their investments in defense and intelligence capabilities. This plays directly into Palantir's wheelhouse. Their software isn't just nice to have anymore, it's becoming essential for modern defense and intelligence operations. The recent conflicts around the world have only heightened the need for sophisticated data analytics in military and intelligence applications. Let's talk about their Foundry platform for a minute. This is where Palantir shines in the commercial sector. What makes Foundry special is its ability to integrate different data sources and create actionable insights. Think about a manufacturing company trying to optimize their supply chain, or a healthcare provider looking to improve patient outcomes. Foundry can handle these complex scenarios while scaling up as needed. Now, about their market position, being added to major indices like the S&P 500 and Nasdaq 100 isn't just about prestige. It means that index funds and ETFs have to buy and hold Palantir stock. This creates a solid floor of institutional investment that can help stabilize the stock during market turbulence. Plus, their strong free cash flow gives them options. They can invest in growth, make strategic acquisitions, or return value to shareholders through buybacks. Then there is the potential for international expansion. They're making significant inroads in Europe and Asia, despite facing challenges like GDPR compliance and cultural differences in data privacy approaches. This global diversification could be crucial for maintaining growth momentum, especially if any single market experiences a slowdown. But as always, we must keep it real. There are some headwinds to consider. The AI space is getting crowded, and while Palantir has a strong position, they're competing against tech giants with deep pockets. Microsoft, Google, and Amazon aren't sitting still. They're pouring billions into AI development. Palantir needs to stay innovative to maintain their competitive edge. The regulatory environment is another wildcard. As AI becomes more prevalent, we're likely to see increased scrutiny and potentially new regulations. Palantir will need to navigate these challenges while maintaining their growth trajectory. Their experience with government contracts could actually be an advantage here, as they're already used to operating in highly regulated environments. And what about talent acquisition? This is crucial in the AI space, and Palantir is competing for top talent, not just with other tech companies, but with startups that can offer significant equity upside. Their ability to attract and retain key personnel could be a major factor in their future success. Looking at their client concentration is also important. While they're diversifying, a significant portion of their revenue still comes from a relatively small number of large contracts. This concentration risk needs to be mentioned, especially as they push for expansion in the commercial sector. While I'm keen to see how Palantir's potential unfolds, I'm sticking to my strategy of waiting until after earnings before making any moves. The technical setup needs to confirm the fundamental story, and earnings will be a crucial piece of that puzzle. While waiting for Palantir's next move, two other standout performers from 2024 are set to compete in 2025. Watch this video where I put Nvidia and Vistra head to head to help you decide which AI stock might be the best buying opportunity for 2025.